Good morning.
Good morning, sir.
Today I'd like to discuss about the concept of reverse charge mechanism under GST. What is reverse charge mechanism?
GST is applicable whenever the supply happens. However, there will be no GST if both suppliers and recipients are not registered. This will happen when the supplier is within the threshold limit or when the supply is the exempted supply. When a supplier only is registered, he will be collecting the tax from the recipient and will be paying to the government. When only the recipient is registered, he is liable to pay directly to the government only in respect of certain notified supplies. When both are registered, normally under GST, the suppliers are requested to collect the tax from the recipient and deposit it to the government. This is called normal charge or forward charge. Normally, business entities would be the suppliers, whereas the category of recipient includes the common consumers also. So, considering the volume of the recipient, GST is so designed as indirect tax. The recipient is not directly paying to the government, but they pay to the supplier, and in turn, the supplier makes consolidated payment to the government periodically. This is called normal charge or forward charges. In contrast to this, in some notified cases, recipients are liable to deposit the tax directly to the government. This is a concept called reverse charge mechanism.
What is the need for reverse charge mechanism?
The government does not have any jurisdiction over the foreign suppliers. In such cases, RCM is applied on the Indian recipients. Further, government wants to facilitate and ease compliance obligations to the less organized suppliers or small entrepreneurs like agriculturalists, goods transport agencies, recovery agents, insurance agents, authors, music composers, artists, etc., when the recipients are the registered business entities. Hence, RCM is applied on such cases of recipients. Mostly, government supplies are non-business oriented. In respect of such non-business transactions undertaken by the government sector, local authorities, arbitral tribunals, etc., RCM is applied on the recipient business entities. Here we have to remember that always only the recipient bears the tax incidence. Only the question is who is going to deposit it to the government and follow the tax compliance procedures. In case of RCM, the recipient is made liable and he has to follow the tax compliance obligations.
What are the types of reverse charge mechanisms?
There are two types of reverse charge mechanism. One is supply based and the another is supplier based. Supplier based means when the supplier is not registered, and supply based means when supply falls under the notified goods or notified services.
What are the notified goods liable for reverse charge mechanism?
When an agriculturist supplies cashew nuts not shelled or peeled, beedi wrapper leaves tendu, tobacco leaves, raw cotton to a registered person, RCM is applied and the recipient is liable to deposit the tax directly to the government. When manufacturer supplies silk yarn to a registered person, RCM is applicable. Further, when government supplies used goods or seized goods or confiscated goods or scrap materials to a registered person, RCM is applied. When government supplies lottery to a distributor or selling agent, then also RCM is applied.
What are the notified services liable for reverse charge mechanism?
GTS service to a notified person, advocates legal service to business entity, arbitral tribunal service to business entity, services of government except certain services to a registered business entity, director service to the company, insurance agent service to the insurance company, recovery agent service to the banking company, long-term lease of land to the promoter, services of author to publisher, services of music composer to the music company are liable for reverse charge mechanism. Further, security services are also liable for RCM with certain conditions.
Is there any difference in payment under forward charge and reverse charge?
While making payment under forward charge, GST may be paid by cash or input tax credit. While payment is made under reverse charge, payment is to be made only by cash and not by credit. Generally, input tax credit may be availed only for outward liability. Reverse charge mechanism is being paid by the recipient only on input goods or input services. So, ITC cannot be utilized for payment of tax under RCM. However, upon payment of tax by cash, the same can be availed as input tax credit and can be utilized for payment of tax for outward supply.
If the supply is chargeable under reverse charge mechanism, whether the supplier is liable for registration or not?
No, such suppliers are not liable to get registered. For example, legal services provided by advocates is under reverse charge mechanism. Suppliers of such service, that is advocates, are not liable to get a GST registration.
Whether composition levy taxpayers are liable for reverse charge mechanism?
Yes, sir. Composition taxpayers are also liable for payment under reverse charge mechanism. If the supply is a notified supply, they are not eligible for availing input tax credit.
What is the rate of tax for composition taxpayers?
There is no separate rate for composition taxpayers. They have to pay at the rates applicable for each notified supply.
Can you say reverse charge mechanism is a facilitating feature for GST?
Definitely, sir. For the reason that it relieves the small entrepreneurs from the burden of tax compliance procedures and it empowers the registered establishments to pay the tax to the government directly. Thereby, there is no need to follow up the suppliers.
Thank you, sir. Thank you very much for the explanation.
Thank you for giving me an opportunity, sir. Thank you.